Top 5 headlines from Dalal Street on a day when Indian markets outperformed their Asian, European and global peers. Welcome to Markets Today, the show where we will tell you all that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Risk sentiment has returned in Europe, and I think that's good news if you're a bull, hoping that this continues. Because last, 24 hours or so have been a bit subdued, although no problems here in India, as you said, outperforming pretty much all markets in Asia. Well, it's a packed show over the next 30 minutes. We'll tell you what mattered in terms of stories. We'll get you the opinion. Sridhar Shivaram of Enam Holdings gives us his opinion on the market. We have two big voices from the auto sector. M&M's Rajesh Jejurikar and Bharat Madan of Escorts will weigh in with what they see as trends post the festive season. Lakshmi Vilas Bank's administrator T.N. Manoharan speaks about its amalgamation process with DBS Bank, and there is more. But before we get to the opinion, as always, let's wrap up the day itself. Lata.
Okay, well, in the morning it appeared that, there could be a bit of profit taking. Wall Street had given us a kind of a tepid handover. It was red, not very deep in the red, but Nasdaq didn't fall much. Dow Jones and Russell 2000 fell a little more, S&P fell a little more, so the expectation was that EMs would struggle a bit. Early Asian cues were also a little tepid, but lo and behold, India outperformed. It is the same thing that we've been seeing for some time now, the migration of investors from what you call growth stocks to value stocks, from stocks which could be, the beneficiaries of a maimed economy, of an economy driven down by disease. What were those stocks? Pharma, IT, even FMCG. They were the growth stocks when we were struggling with COVID. But now, as we are moving towards normalcy, the money is moving away from FMCG, IT, pharma, moving towards stocks that will benefit when the economy normalizes. So investors call it the migration from growth to value. That's what you saw. Largely banks, PSU banks more than private banks, and a large swathe of mid caps. Plus, auto stocks, again, they do well when the economy is normalizing. These were largely the broad themes that were being played. Well, you can say, this is largely also a liquidity play. You have done what you can with the growth stocks, and so now you're looking for other themes. But for the moment, the market is enjoying it. Traders and investors all happy as the Sensex and Nifty notch up fresh highs. Prashant, you tell us what stood out for you stock-wise.
Banks, autos, a bit of real estate and the broader market, mid-caps. That's sectorally the lay of the land, the state of play today. These are pockets which did the best. And, they're on your screen, 3.5 on the PSU Bank Index. The private bank index, almost 2. The Nifty Bank itself, about 2% higher. Your names like SBI has been doing well, but look at Bank of Baroda, PNB, some of these other Tier 2 PSU bank names also have started to participate. Let's see how far this goes. Autos, of course, we'll discuss in greater detail, and the real estate and the broader mid-cap index on your screen as well. What was under pressure? FMCG, IT and pharma. 3 areas which were down, but 0.75% to about 1% max, so nothing large. The gains coming through, let me sort of read out the auto names: M&M, Tata Motors, Eicher, Maruti. And M&M and Tata Motors, of course, by far, were the leaders in terms of the kind of gains they saw today. They were in financials. Bajaj Finserv continues to run higher, another 6.5%. IndusInd Bank is back above 800, 820 now. SBI 250 plus. The rally continues. Bajaj Finance, ICICI Bank is almost at 500, and Kotak Bank continued to do well as well. The rally actually in financials, at least the larger banks, began mid-afternoon or so, and it picked up steam after that. In the old economy names, look at L&T, rank underperformer, and it started to participate. So 6.25% higher. Adani Ports 3% today again, and Hindalco was up about 3% as well. What was down? BPCL continues to be down and out. Yesterday 4%, today 3%. Lever, Dr. Reddy's, Titan, TCS, ITC, and Hero MotoCorp were the stocks which sold off. The broader gains coming through in the Adani Group stocks. The rally there has been relentless. Adani Gas, Transmission, Power, Ports. Quite a bit. Shriram Transport commercial vehicle financing names, Federal Bank, old private sector bank name, it's back above $60 now. M&M Finance, LIC Housing, SpiceJet had an upgrade, it rallied. L&T Finance, Century Textiles, VIP Industries, IIFL, ABB, Rain Industries, Wabco. I mean, this looks like classic sort of underperformers starting to get bid up because elsewhere, I mean, the gains have been very, very large. So it almost seems like, I mean, it's a Excel sheet exercise. What is the maximum away from pre-COVID levels, decent quality? I mean, market seems to be chasing those stories. Lata.
Fair point, Prashant. There is so much of liquidity. So you're right. The liquidity is just looking for a home, and stocks that have not run up look pretty attractive. Okay, let me leave that opinion to the experts. We spoke with Sridhar Shivram of Enam Holdings, and he said that global liquidity is likely to continue to keep markets higher. He added that he was becoming bullish on PSU stocks, including PSU banks. Listen in.
I think we may be entering, a last leg where, markets could go into a frenzy. Because at least for the next 1 year, I don't see too much of an issue as far as markets concerned. Fed has already given their broad indication on where they are in terms of liquidity and all the stimuluses. And this is party time for the market. For the first time, I'm actually getting bullish on the entire PSU basket, not because of anything, but the fact that it looks like the government is serious on the divestment process. And we've seen that for BPCL, they have now not extended the deadline. The process may take, say, another 2-3 months. And as this process goes on, and if they're successful in completing even one of the transactions, we could see a significant re-rating. I think there is deep value here, but it could also be a value trap. As I said, this is the first time in many years that I'm getting bullish on the PSU basket, more because I'm seeing intent from the government on privatization.
Okay, so last leg, but often last legs are blowout moves, and that's what Sridhar was referring to. Markets could get into, and possible, a bit of frenzy. To the second headline, then M&M soared over 10%, and this is on account of a whole host of reasons. Tata Motors was the other one, which was extremely strong. My colleague Sonia is here with some interesting data on the rally so far. Sonia.
Well, there are many reasons why the stock is rallying today. Of course, ever since the numbers came out and the company came out with a very tighter capital allocation policy, that's when the stock started to move. The company decided not to invest any more in loss-making subsidiaries. They're looking for a buyer for SsangYong. They've also decided to close their aerospace business, which is Gyps Aerospace, and that's what the street liked. Apart from that, today, Escorts told us that the retail demand is very strong in the tractor segment. In fact, Escorts has raised their capacity as well. So we decided to do a little bit of a comparison between M&M and Escorts, and we found out that both on a valuation as well as on a growth parameter, M&M is doing better than Escorts. So M&M is trading cheaper than Escorts as per FY22 valuations, trading at 15 times, while Escorts is at 19 times. And even if you just go by the Q2 earnings, on the revenue growth purely for the tractor business, the M&M revenues were up 33% in Q2, while Escorts was up about 24%. Not just that, the margins of M&M in tractor business stands at 24% plus, while Escorts is at about 19.7%. And Escorts, in fact, has lost market share to M&M because of production and supply constraints. Their market share fell to about 9.8%. So on all parameters, M&M seems to be doing better, and the tighter capital allocation policy is another added positive. Back to you.
Oh, yes, Sonia, take that point entirely. In fact, that's one of the very big positives. We spoke with Rajesh Jejurikar of M&M, and he says he has not seen such kind of tractor business, tractor demand in years. And he says this is being driven by the rural story.
The many years that I have been now associated with the tractor business, which is almost 8, I haven't seen a year of demand of this kind. And it is manifested not just in demand, but also in very good cash flows. Cash flows in the farm business are not as seamless as in the auto business. I mean, that's the fundamental difference in the two business models. But for the first time ever, the farm equipment sector in Q2 actually came out with a negative working capital cycle.
Okay, we also spoke with Bharat Madan of Escorts, who told us that the company will increase its production capacity soon. He added that retail sales have been very strong and he expects to see good growth in the company's top line over the next 6 months. Listen in.
Kubota joint venture has the earmarked capacity of 30,000 tractors for Escorts, which will also should come into production now somewhere, I think, around June next year. So the trial should start and we should be able to get the commercial production rolling out from Q2 of next year. And our own announced capacity, which is 140, I think will get ramped up to 150,000 per annum, which is 12,500 per month. And so the accumulated total combined capacity will be about 180,000 for us.
Okay, that's evidence that there's a lot of demand. How many people will be willing to put capex today unless they see very good demand? Okay, with that, we'll go to the third headline from the street today, or for the street today. Lakshmi Vilas Bank shares hit lower circuit. That's 20% down after the bank's equity is all set to be written off completely and its shares delisted. The Reserve Bank has also ordered that the bank is going to be amalgamated with DBIL, which is the wholly owned subsidiary of DBS, the Singapore bank in India. The bank is has been put under moratorium and withdrawals have been capped at 25,000 rupees. Well, let me not steal the thunder from Ritu Singh, who has the entire backstory and all that happened in the last 24 hours on the Lakshmi Vilas Bank counter.
IL&FS, DHFL, PMC Bank, Yes Bank, and now the latest one to be added to the list of financial sector failures is Lakshmi Vilas Bank. The government has placed Lakshmi Vilas Bank under moratorium for a period of 1 month until the 16th of December and capped withdrawals at 25,000 rupees per account holder during this entire time. And simultaneously, the regulator has also announced a draft scheme of amalgamation under which Lakshmi Vilas Bank will be merged with DBS Bank India, which is a wholly owned subsidiary of DBS Bank Singapore. First, why the moratorium? Lakshmi Vilas Bank has long been a problem child, and its rapidly deteriorating financial position, the absence of any credible plan for capital infusion, especially after the deal with Clicks Capital hit a dead end, a continuous outflow of deposits almost, and some serious governance issues in the last few years have forced RBI's hand. Therefore, to protect the interest of the depositors, RBI immediately announced a merger with DBS Bank, which has been, we understand, in the making for quite some time now. The board of LVB, or whatever is left of it, has also been superseded, and RBI has named T.N. Manoharan, the former non-executive chairman of Canara Bank, as the Lakshmi Vilas Bank administrator. DBS Bank will bring in 2,500 crores of capital upfront to support the credit growth of the merged entity, and it is perhaps this large amount of capital support that made RBI favour DBS over some of the other suitors. RBI has also invited suggestions and objections to this draft scheme by the 20th of November, only after which it will take a final view on the matter. Now, as per this draft scheme, and this is important, while depositors will be completely shielded, shareholders will see their wealth completely wiped out. The entire paid-up capital, the shares, the reserves and surplus of LVB will stand written off from the appointed date of the merger, and its listed shares and debentures will also stand delisted. Now, this is completely in contrast to what we saw in the case of Yes Bank earlier this year, where Yes Bank's shareholders' wealth was, of course, eroded over time because of numerous issues with the bank, but it was not completely wiped out to zero, which is the case in Lakshmi Vilas Bank. Secondly, depositors were and are the first priority in both of the cases. They did not lose a penny in the Yes Bank case and are not expected to do so in Lakshmi Vilas Bank. And lastly, Yes Bank still retained its identity even after its reconstruction, which will not be the case when it comes to Lakshmi Vilas Bank, which will be completely absorbed into DBS Bank.
Ritu, thanks very much for that detailed sort of explainer on what has happened and what is likely to happen. Now, the administrator of Lakshmi Vilas Bank, T.N. Manoharan, said that Tier 2 bonds stand at 368 crore rupees as of date. He also expressed confidence that the moratorium will end well before the end of the 1 month period. Listen.
So as far as Tier 1 bonds are concerned, we don't have anything. It is nil. As far as Tier 2 bond is concerned, it is rupees 368 crores as on date. Evaluating all this, the developments at Lakshmi Vilas Bank, it was considered appropriate for the Reserve Bank of India to impose this moratorium in the best interest of all the stakeholders and also for restoring the confidence of the customers and depositors. So from this perspective, this moratorium is just 30 days of duration, and we are confident that well before that deadline of 16th of December, we will have a resolution in place.
Okay. So that's very important what Mr. Manoharan said at the press conference, that the moratorium may not, in all probability, will not go on until December 16 and could be lifted earlier if this scheme of amalgamation has been, and the formalities are completed. We're going to take a break on that note. We'll be back in a jiffy. Lots of other interesting things happen in the stock markets. We are back.
Welcome back. You're with us here on Markets Today. We're running you through the top headlines, the stories and the opinion. We got through three of the top stories. Let's move on to the fourth headline. Financials were the flavor of the day. The Nifty Bank rallied 2%, but PSU banks fared even better. Their index gained over 3%. Financials like Shriram Transport Finance, LIC Housing and M&M Financial did quite well. I mean, you know, the underlying reason, Lata, in a way, of course, is that these are all economy-facing stocks. And, you know, as the economy reopens and gets back to more normalized levels, these tend to be the best plays. We've seen that in the past, and something similar is playing out now, isn't it?
Oh, well, I would think so. You put it very well. It's largely a belief that you don't have to go for the stay-at-home stocks, which were tech and pharma, and maybe even a bit of FMCG. Those were the only things people were consuming when they were at home. And now people will come out and... but, you know, for the banks, the other important thing is as the economy normalizes, we are also realizing after the second half results, second quarter, or rather the first half results, that they have not been harmed as much as feared by the COVID cases. The number of defaults are nowhere near as much as the investors expected. That's another reason why we are seeing a lot of comeback in the banking stocks and the NBFC stocks. But the last and the best indication that banks will do well is the way in which we are seeing bidders fight for the DHFL assets. You know, the housing finance company, it was a big tragedy when it went down, and we saw NBFCs come down and not being able to raise money. And now you've got a rival group, the Adanis, the Piramals, Oaktree, all of them willing to bid higher and higher and getting angry that somebody else has bid more. So that itself is an indication that things are not so bad and people want to buy bad assets, which means banks which are sitting with some of these slightly stressed assets could find buyers, or the economy is turning. That also is adding to the strength in the banking shares. And of course, there's a lot of liquidity. So people are looking for value, as we've been saying for the past several days. Now, only on the point of DHFL, let me go over to my colleague Ritu Singh, who has the latest in that case. And she's exactly saying that people sulking that one bidder is getting ahead of the other.
Protests against Adani Group's surprise offer have intensified, and all of the three remaining suitors, Piramal Group, Oaktree Capital as well as SC Lowy, have threatened to walk out of the process altogether if the lenders consider this bid that has been made by Adani. This was communicated to the Committee of Creditors and the administrator of DHFL before the lenders meeting that was held yesterday. Therefore, because of this increasing pressure on the lenders to not consider Adani's bid, lenders have for now decided that none of the bids will be opened. Simultaneously, an NCLT hearing in the matter of NHB and DHFL, which has been ongoing for some time, the court has asked the lenders to not vote on any of the resolution plans, at least until the next hearing, which is on the 3rd of December. So voting on all resolution plans has also stalled. In the meantime, we're given to understand that lenders will reach out to all of the other suitors to try and placate them to not walk out of the process just yet, as the banks are still undecided on the treatment that will be meted out to Adani's latest offer. But as things stand, Adani Group has made the highest bid of 31,250 crores for the entire book, and that does promise the lenders the highest recovery, but the process itself may be a little delayed. Ritu,
thanks very much for that. We'll see how this goes. It's an interesting story to track. Let's move on. Axis Bank and Max Financial soared over 1% after sources told CNBC TV18 that all regulators, that is SEBI, RBI and IRDA, are on board with the Axis Bank Max Life deal. I mean, this has been something long in the making, but it looks like it would be coming close to fruition. My colleague Yash broke the story. He is joining in with the details. Yash.
Well, the story lies in the headline itself. What we're given to understand from our sources is that all regulators involved in the Axis Bank Max Life deal have come on board with respect to the revised contours of the deal between the two companies. We are told by our sources that IRDAI recently wrote to both SEBI as well as RBI to understand if both those regulators had any concerns about the transaction, and we are told that both banking as well as the markets regulator have given their respective go-aheads for this particular deal between the two companies with IRDAI. Of course, now the ball rests in IRDAI's court, and there also we are given to understand that the insurance regulator also does not have any major concern and is willing to give its approval to allow these two companies to go ahead with this respective transaction. As far as the timeline is concerned, we are given to understand that Max Financial Services is expected to file the revised papers for the transaction in the next 7 to 10 days, and once that happens, IRDAI's final approval is expected in the next 15 days, that is by mid-December. One very important clarity which has emerged is that if Axis Bank wants to sell out its stake in Max Life Insurance at a later stage, it will have to do so at a fair market price, at a fair market value. This against the put clause which was inserted in the earlier form of deal, through which Axis Bank could sell out its stake at a predetermined price.
Okay, thanks for that update, Yash. Now, finally, Tata Steel was one of the best performers yesterday, immediately after its results were announced. The only sore point about Tata Steel is what happens to its UK operations. Nigel, our colleague, interviewed TV Narendran, the managing director, and here's what he said about the UK steel plant.
We are, kind of almost there with the efforts we put in. But like I said, that cannot stay on through all cycles, it's barely there. And it cannot kind of be that way unless there is some support. So I will leave it at that. It won't be appropriate for me to discuss closure, because our intent is to run the business on a cash neutral, cash positive basis. And but we need the government support to do that in the long term.
Okay, so that is the Tata Steel boss man there talking about plans with the company. Well, that brings us to a close, Lata.
Yes, it does. From the entire Market Studio team, thank you for watching, and don't go anywhere. There's lots lined up on CNBC TV.